Home builders are desperately trying to liquidate their inventory before the end of the year, creating some tremendous buying opportunities for you as a home buyer or a real estate investor out there. However, I have to warn you all, if you buy a newly built home or you own a home in a city or a neighborhood where home builders are going crazy, expect values to continue to crash over the next year because these home builders are on a price cut rampage right now, heavily discounting homes like this one in Austin, Texas, which was just cut by 15% down to less than $300,000. And as you zoom out on this map from where this home is, you can see tons and tons of newly built homes with price cuts. So this is the important thing to understand.
In the home building sector, uncertainty has spread like wildfire, and even the biggest firms are struggling to react. First Source, one of the largest home construction supply companies in the Dallas, stated recently that it will reduce several of its operations to focus on acquisitions. According to Keith Hughes, a director at the real estate analysis firm Zonda, says that builders would often try to encourage a homebuyer first, typically with techniques geared at lowering mortgage rates, to move inventory before lowering the base price.
Home builders have a lot of pricing power in the market. When they cut the price aggressively, that means values across the metro will go down aggressively. And in particular, we can see a state like Texas is most exposed here to these home builder price cuts. 40% of the listings in Texas more broadly are from a home builder, are new construction listings. So home builders in Texas, they're going crazy. Tons of inventory, tons of price cuts, as well as a state like Utah. In Utah, 43% of the listings come from home builders. While it's a similar story in North and South Carolina, also around 40%. And why it's so scary to buy a home built by a home builder or to live in a city where home builders are going crazy right now is because they are on a mission. They are on a mission to get rid of their inventory. Take a look at this article from The Real Deal talking about how spooked home builders are going to dump inventory by the end of the year. And they quote home builders in this article saying that the best time to buy a home will be in the next 3 months and that they're going to discount the heck out of them, which again is going to be great news for you as a home buyer. These builders are really starting to get aggressive in discounting the price. However, the problem is that these builders, they know something, right? They know that this housing crash is going to get worse, or else they wouldn't be doing this, right? Like if the builders thought that things would get better in early 2023, there would be no rush to get rid of the inventory. They would be okay with homes being completed and sitting in inventory on the market. But clearly they don't think that. They think the situation is going to get worse. And the reason these builders think the situation is going to get worse is because they're looking at their data. They're looking at home buyer traffic, which has now collapsed to the lowest level since the start of the 2008 housing crash. This is the number of people going and touring new construction homes. Data from the National Association of Home Builders, and you can see here it's down 61% year over year. I mean, that's an astronomical decline. So this collapse in home buyer traffic today means demand for buying homes in the next 3 months is going to drop by even more. But not only is this drop in demand freaking the builders out, we also have the drop in demand being combined with a huge glut in backlog of supply. As you can see, the yellow line, the number of homes actively under construction, that is now shot up to a near record level, over 830,000 single-family homes actively under construction in America. And you can see this tremendous gap between the supply and construction, and the demand indicates that this housing crash is going to get worse. We're going to have even more inventory piling onto the market, especially newly completed homes. And this is what the builders are seeing, and this is why they're getting so aggressive. So I would say this, if you're a home buyer or real estate investor, pay attention to what the builders are doing. There's some deals that are starting to be had. However, don't rush into it, because I think the deals are going to get even better in the beginning of 2023, especially in certain cities, everyone.
So I think most people can agree that housing has been in a recession for most of 2022. We've seen this massive reversal. And in fact, it doesn't matter what you cite, whether you're talking about the National Association of Home Builders. We've seen the most rapid decline, including heading into the housing bust of 07, 08, 09. We've seen a more rapid decline in prospective buyer traffic in the headline index for the home builders than we saw back then. What we're seeing in terms of single family homes building in the pipeline is biblical. There are 900,000 multifamily units that are under construction right now, a 50-year high. When was the last time you said that's the highest in a half century? I mean, there's just wild stuff going on, and it's the rapidity with which it's happening If you look at MBA, the most real-time indicator you can possibly follow on the housing market is every Wednesday morning at 7 a.m. Eastern, you get Mortgage Bankers Association weekly purchase applications. The decline in that index has been twice as fast as what it was going into the last housing bust. This is just extraordinary, and I think the media is really messing up in its coverage of what's happening in housing because of the absence of supply. That does not necessarily mean that when push comes to shove, especially if you've got some of your net worth in that house and you've seen your stock portfolio shaved by 25%, it doesn't mean that that seller's not going to sell. It just means that they're less inclined to do. They'd rather age in place. It's a great narrative. They really would. But they know that they've got equity and wealth in that house and that there's wealth being destroyed in their IRA or 401k or whatever there is in the public markets. 50 to 10 is pretty big. The only thing that's not remarkable about multifamily sales. So we're talking about two individual owners of a multifamily property selling to one another, the same way an office building would change hands. The only thing that's not remarkable about the 26% year over year decline in sales is that office sales are down 56%. And again, this was one of Quill's biggest narratives going into 2022. If your office ecosystem never rebuilds, whether it's work from home, accelerated automation, offshoring of high paying jobs, all three of which we've seen. But if your office ecosystem never fully rebounds, it looks like we're going to see this castle with the K data top out somewhere around 50%. Then the multifamily urban, community. I mean, 2 years ago, I was counting cranes, Jack. Counting cranes in Seattle, counting cranes in New York. You would count cranes to see where there was going to be the most development, where residential real estate as a whole, because multifamily pours into that for the GDP, was going to be the most additive. Which section of the country? Now it's like you're trying to figure out how many large, tall structures were overbuilt to supply an office ecosystem that's not recovering. Well, first of all, the Fed, in the same way that the Fed created the subprime crisis, Jim Grant's always famously said the Fed is both arsonist and firefighter. But the Fed didn't have to buy up a third of the mortgage-backed securities market and keep interest rates at the zero bound, which put lots of leveraged money into investors' hands. Remember, a third of all housing transactions in 2021 were investors. So the Fed didn't have to set the monetary policy that allowed for the speculation gone wild that created the bubble that's now deflating, because it's raising interest rates so aggressively and so quickly. So it's like Frankenstein on steroids. There's a lot more home equity that's been built up. There's a lot more wealth in housing. So you don't have as many, we're not talking about this kind of epidemic of underwater mortgages, people who owe more on their mortgage than what the house is worth. That being said, I'm hearing anecdotes that there are issues with getting appraisals. The appraisers are no longer playing ball. They're not setting prices where they need to be in order to transact. And I'm even starting to hear anecdotes about negative equity. Remember, people bought in at the very, very peak. A lot of them did so with FHA mortgages, only 3.5% down payment. You don't have to move the needle a lot in order to be in trouble. So you're right. On a fundamental level, we are not staring down the barrel of 10 million plus foreclosures coming up. But there will be a foreclosure wave. There will also be foreclosures based on property taxes that are going to be so high for so many homeowners who've been in their homes for a long time, who own their homes outright, retirees on fixed incomes. They're going to get these massive bills. They're not going to know what to do with them. And we saw this phenomena. We saw property tax foreclosures in the last downturn. We've just forgotten about them. But so there will be, when somebody like Wells Fargo comes out and says, expect home prices to continue falling through 2023, I mean, that's a pretty decent source, and they're better off if home prices don't fall because they're one of the biggest mortgage lenders on the planet. So in that sense, you really have to pay attention when it's not just Danielle saying, housing's in the pisser, when there are other established outfits. And I'll add one more thing.
Yeah.
I don't think we've seen as much downside in housing because sellers are standing pat.
Mm-hmm.
So we forget how comps work. Comps work, all you need is one or two in a neighborhood to trade hands at a price that has nothing to do with what it was a few months ago when homes stopped selling. And what we are seeing is the days on the market increase. And the fastest and most dramatic decline that we're seeing is in $1 million plus homes.
The Case-Shiller Index, which is a lagging indicator, is beginning to flip market by market, including Phoenix, Washington, Dallas, Boston, and D.C. California's housing market is a trailblazer, with low sales volume and steeply falling prices. The median price in the major Bay Area counties, including San Francisco, is lower than it was a year ago, and it's much lower in Southern California.